Please visit tradingsim.com to simulate this trading lesson. Hey day traders, this is Al Hill from tradingsim.com. Today we're going to be talking about the sell stop market order again. In the previous example, we talked about the sell stop market order in terms of protecting against potential losses, right? Meaning that we were down the position. In today's example, we're going to look at the sell stop market order as a way of continuously retaining the gains or positive cash flow that we have accumulated from a position going in our preferred direction, right? So meaning that the stock's actually going with us, we're happy, and we want to continuously lock in profits. Versus in the previous example with Baidu, we were simply putting the stop market order out there to protect ourselves from any further losses. While here we're going to show how you can actually use the stop market order to lock in gains as the position goes in your direction. Okay? So today we're going to be covering ticker CELG from June 30th, 2010. The stock had a pretty vicious gap down. Let's fast forward here a little bit. All right, so let's say you come in, you're buying the panic here a little bit. So say you go in, you nail 1,000 shares at market. All right, so you have a price of $50.23. Now again, this isn't a trading strategy video per se. We're just showing how a trader can use the stop market functionality in order to lock in profits. So we're not going to necessarily show you how we put the stop market order in once we initiate the position to have the initial insurance here. We're just showing how you can use this functionality to lock in profits as it goes in your favor. All right, let's fast forward a little bit. All right, as we can see here, the stock is going in our favor a little bit, right? So if it's able to break this high here, we're going to want to put a stop market order in beneath the low of this candle, which is $50.24. All right, now we can put our stop market order in at $50.23. And you can tell this is also the same level of our the price we actually initiated the position. So now you can see we actually right now net there's no real risk here. Maybe the loss of commissions, which is approximately, let's see, $8. So now we're pretty much in a risk-free trade. And we're up approximately 2.69%. So let's say here, as a trader, you're going, well, this doesn't look that good, right? You have this red candle here. Stock's starting to roll a little bit. You know, we're up 2%, right, on a day trade. So let's move the stop below the low of this candle, which is $50.94. So let's say $50.93. Let's go back in here. Let's cancel this order, stop market order. Let's come back over here, and let's put a stop in at $50.93. Again, the game here is you're just trying to continuously lock in profit, right? So now you can see, well, you know what? We're going to execute a stop market order, which again means that it's not a limit, right? So you're going to get the best price once 50.93 is touched. So sometimes you can actually do better or worse depending on how the bid and the ask orders are coming in. But for the most part, you know, again, you're just looking to get out with some solid gains and lock in these profits. So now you're able to lock in this entire range here of profits in the event the stock, you know, goes against us. Okay, and we're still at 1.81%, so life's good, right? So now you're just risk-free trading, and this is really the best kind of trading because you have a clear conscience. You're not worried about losing money. You're not constantly obsessing over the time and sells window and or the price action because you've been able to lock in profits. All right, looks like we're coming right up against it here. Still up 1.57%. And again, another key part or logic behind this stop is that it's below a whole number. So sometimes you're going to have a lot of buyers come in and they're going to try to give some protection, right? So you're going to have these folks here, right? You're going to have these folks here that had this first little pop up and then pulled back. So these guys here long are all sitting here. It's at a whole number. So again, this may lend a little additional support, maybe not, but again, you can kind of see this is why the stock stalled here in terms of on this pullback, because I think the buyers were trying to keep it above this whole number of 51. All right, out at let's check what we got out at. We got out at 50.92. All right, so we got in at 50.23. I'm sorry, yeah, 50.23. 50.22, excuse me, 50.22, and we exit at 50.92. So 70 cents on 1,000 shares. So you're talking approximately $700, right? And that is from 9:33 to 12:14. So not really a bad day, right? Less than 3 hours worth of trading, and it was stress-free trading, as you saw. You know, we had a stop market order in to make sure we didn't lose any money initially. As CELG went in the direction of our favor, we actually just upped the stop, and we were able to lock in profits. So now, regardless of what happens the rest of the day, be it goes back to our entry price or even breaks the low of the day, not our concern because we were able to make profits. All right, good luck trading.